Thank you all for joining us, and thank you, gents, for being here. So as we delve into our discussion, I'm curious to learn about each of your primary objectives for this conference. And could you highlight the types of talents, projects, and teams that would benefit from connecting with you?
Hi, I'm Kane Lee from Neois. It's an older Korean company. Primary objective to be here is to meet really good friends and then perhaps make some new ones. And of course, to visit the beautiful city, Krakow. And probably when we talk about projects that we were looking for, teams, it will be something that has both ambition and also realistic approach.
Hi everyone, my name is Misha Katz from Arim & Co. We're a gaming-focused investment bank based in London. We advise companies on mergers and acquisitions in the gaming space. And I already had some pierogies here in Krakow yesterday, so I guess my main objective, or one of them, has been fulfilled, but there is more to do. But to be honest, on a serious note, we're very keen to connect with ambitious studios that want to learn about their financial options down the road in terms of raising capital, selling equity, and so on. So happy to connect.
Does this work? There we go. Hello, I'm Curtis from Makers Fund. We're global VC investing really early in mostly studios building games that have really bold ambitions. For me, why I'm here, a lot of it is getting to know the people in the Polish ecosystem, whether they're working today at established studios or thinking of starting something new and looking at their options to bring that to market. But a big part of it is just sharing how we think about partnering with studios early on and raising a bit of awareness that this is an option to bring a game to market. And we'll talk more about it over the course of this panel, but it's really just about awareness and building a relationship early on, as opposed to, hi, nice to meet you, here's a term sheet. Not really the best way to forge a partnership. So yeah.
Okay, so that's a great bridge to our next question. And let's talk about the investment landscape for fresh studios and projects. And since we have representatives of two important potential investors in studio, strategic investor and venture capital investor, I would like to give you some information about the differences of perception and how those two groups invest. So Curtis and Kain, can you give us a rundown on how you like to invest, the approach that works best with you, what catches your eyes in the pitch, and what kind of companies you are most likely to back?
Yeah, so maybe it's a little bit too general, but I want to build on top of what I've already explained. It's the ambitious and also how realistic it is. Obviously, we want to look at projects that would have either a unique selling point, either targeting a new market, having a possibility to expand in certain space. But at the same time, we wouldn't be able to invest into a studio if we don't see how that studio would go to that path, right? So for that to happen, the plan probably has to include, it has to be very specific, has to include the right teams and talents, and we would want to know if there's something going rough on the road, like how are you gonna tackle those challenges?
So I'll start very basic. At a basic level, we're doing minority equity investments into studios, not projects. So it's very much about what is the identity of that studio and on a very long time horizon, why do we believe that it can grow and become something with a massive audience and a ton of engaged people in the community. What that means more tangibly for us, honestly, a lot of the time is what's the background of the people that are building that studio? Have they done something relevant in the space before? What's the vision for it? And why does it need to exist? What need are they meeting and fulfilling in the consumers of games more broadly that isn't met today, or that they think they can address in a novel way and better than the other options that exist? And then does it make sense, the roadmap to get there? And so it may not be, I think a lot of the perception of VC is, hey, we want to only invest in things that are like multiplayer, live services, huge audience, forever games. And eventually that does fit the archetype of the risk reward profile we're looking for. But it is much more about like what is that studio role and identity within the ecosystem, and how can they compound that expertise to get to a place where they are like the best option to deliver that.
So it's not like when someone approaches you, they need to pitch you the longer story than just a single title that they are working on at the moment.
Yeah, definitely. And I mean, the immediate title is really important, and we're going to spend time on that, because without the immediate title working, there's not a studio to build after the fact. But it doesn't always need to be that the first project is the home run success. And I can point to probably more studios that are examples of compounding that expertise than I can point to ones that nailed it their first shot out of the gate.
Okay, thank you. So before I go to Misha, I wanted to tell that this discussion is meant to be as interactive as possible. So if anyone from the audience is interested in asking our panelists about anything, if you want to add anything, if anything that we said is not clear for you, please ask. There is a microphone there, and we are here for you, and you can ask the questions at any time, not only at the end of the panel. Misha, you look like you have probably the broadest perception of the market, because you are looking at every deal that is happening. Misha's bank is worked on like half of the deals that happened, the biggest deals that happen on the market. So this is a great knowledge. So looking ahead for the next 12 months, how do you predict? How do you think who could be the most probable investor for the young Polish studios, rather strategics, rather VC funds? How Polish investors Polish young studios should look for the investors, or
it's a
what group?
big question. Wondering if some of them are sitting on this panel, but I think just to stepping back, so we're a kind of a third party, an advisor in a lot of the strategic M&A deals or financing deals, the later stage ones in particular, in games, with a kind of larger team focused on that globally between London, San Francisco, Berlin. And obviously we've seen like a cycle, evolve and the change in that cycle over the last 3-4 years, with the rise of a lot of the venture capital funds focused on the space. So that has been a fascinating sort of phenomenon, seeing specialized VC funds going after content, or even everything except content. But if you compare that, and it feels like, oh, there's so many new funds being created, etc. Still, if you compare that to the size of the industry and just put it next to, let's say, soft, like non-gaming, non-entertainment software, like just SaaS in general, like it's just still a microscopic sort of universe. And we tend to see that like not every company, not every deal is kind of VC compatible. So we should talk about like what's a deal that fits the VC criteria, what is a deal that can fit more a strategic criteria, what should just be, what project should be working with a publisher or a project finance kind of partner. So we've seen that evolve and go from like the crazy kind of COVID years back to normal, and back to very kind of rational investment thesis around, okay, what are the scenarios around this project, with costs going up, with market sometimes feeling saturated, etc. So I think, Radzym, to your point on who is active, you have the usual suspects, like very large players from Asia, from Europe as well, who look more and more into geographies with a lot of talent and more attractive kind of cost structure than, let's say, kind where you sit, right, Santa Monica, in a way. So that's been a trend, and has put definitely Poland on the map. We see more private equity capital. The caveat here being that for a studio to be like private equity compatible, it needs to fit like certain criteria of being like predictable revenue, maybe like the right size and being essentially a platform to then add more games, more teams, more studios on. So we just worked with a few weeks a deal that closed recently, Jagex, like a very old company from England doing RuneScape. RuneScape is 20 years old and had its sort of biggest year in revenue and profits in 2023 with that massive audience that's very engaged and so on. So this is a small universe of those type of companies that are kind of fit for the private equity landscape. So you have VC, you have PE, and then a lot of like different strategic players who are, I guess, have to be more rational than like 3 years ago, but still have to fill their pipelines for 25, 26 and beyond. And if they go too deep into cutting projects, killing studios, like you're gonna have that cycle will sort of turn again, and you'll have the opposite of like not enough content being shipped. So definitely an interesting moment in time.
Can you want to add something to this?
I guess it's I want to add a little bit on how we would be more, maybe not necessarily comfortable, but more resonate on when studios wants to build the company into the next stage. And it's not necessarily, well, in one half probably we want them to build on their IP and then build the fan and then create the next project with a better team or bigger team with experiences. And then we have on the other half all the next Riot Games, next X Blizzard, like these companies that are they're going for live operations and making games that would be on top of in the market for the next 10 years. And then there are definitely a lot of games in the convergence where it started off with a good IP and then they add a lot of elements in game as a service, live operations, and probably a lot of strategics also played a big role in maybe incentivizing or investing big amount and then trying to capture that market. So it's probably a good market for us to always look in different areas. For us, that's why we try to be more on the Western markets. That's why we tried on the areas that other Korean companies traditionally didn't focus on. So it's an exciting period of time for sure.
Thank you. Each of our panelists has some experience on Polish deals, and I think that it's also interesting that each of those deals probably present a different kind of deal, different perspective, because Kain invested in a content studio, Curtis invested in more like tech-run and VR studio, and Misha worked on some exits, so like the end of the cycle. So I wanted to ask you to share, some experience of your work with the Polish entrepreneurs and Polish studios, and maybe starting with you, Kain. What did you like about the studio you invested, and what you look for in the next Polish deal?
I think on that specific case, it's I want to be honest, it's probably it was a big surprise for me. It was a big surprise for the whole team. I got on top of congratulations from my colleagues in the industry. I got tons of message from my colleagues in the same company that they were actually surprised that we closed this type of investment and partnership. And the reason for that obviously is Neowis was not a type of a company that has active presence outside Korea. And the only reason why it could have happened is on top of all the ambitions and realistic plans that we saw. It's more of not just some people agreeing to the deal, but a lot of people, both sides of the executive, having meetings after meetings and actually getting down to some of these challenges that they would expect to happen in the future, and how transparent they can share and then expect what to do next. That gave them a really good confidence level, and that's not just happening by some things doing right. It's more of having a really unanimous agreement of how it could have happened.
And what I wanted to add about this particular investment is that I think that in this company there is a great combination of a development talent and a business talent. What is, I think, still not very probably often in Poland. And we have a great group of development talents, but I think that we still need more business talents that could work with those development talented people and help to build the great companies together. Curtis, you have two companies that have some aspects connected with Poland, meaning the Polish funders. One actually launched their product last week, right? Vinci Games.
Yeah.
So can you share with us your insight or perspective of working with the Polish funders? And
yeah, definitely. So Vinci Games, just context, they're a VR studio. They make a game called Blacktop Hoops. It's basketball, very social, very like third space for people to hang out in virtual reality, targeting a bit of a younger demographic. I would echo what you said of typically what we see here and why I'm spending time here and why I think people are getting more and more excited about Poland for game dev is the product talent is awesome. People are very, very thoughtful about the experiences they're building and who they're building them for. And Vinci was very much a case like that, where they were super embedded in their community. They went on live on App Lab, I want to say like a year and a half ago, had a couple 100,000 people in the community and just spent a ton of time with them understanding, okay, why do you love this product? How do we make it better? And iterating on it and building that community with that feedback. Generally speaking, I think that's the profile of studio in Poland that makes a lot of sense for venture, is very product focused, not chasing something super high budget. VR is a great platform where, I mean, Gorilla Tag is the perfect example of super low fidelity, not investing a ton of money in art and graphics and animations, but instead really honing the experience and finding something super fun. And it's a scrappy team. And so if you raise some money, you have a lot of time under that construct to iterate, work with your community, find the fun before trying to scale. The other one is Million Pugs. It's less in the studio vein. It's basically Honey, the loyalty app for gamers. And so they strike partnerships with a bunch of big developers and offer rewards for people spending on other platforms, but probably less relevant to this audience.
And just one thing about Vinci Games, I also think that this again, what I said, because in Vinci, like business is coordinated by an American, while development is done by mostly Polish talents.
Yeah, definitely. And with the right partner, if you're very product focused, the right VC, the right strategic, the right publisher, depending on what you're looking for, can offer that support. So we do have some founders in our portfolio that are just like product, and then we run the pipeline with publishers or platforms if we need to.
And the other thing, I guess, I don't know how it would work for NeoWiz, but I guess that here could help you that they have also great angel investors, and it's always good to have an angel investor in your cap table, probably because it shows that there was someone that is recognized on the market that believed in this idea.
It's that, but then it is also they have capital to build the product and the community to a point where it makes sense for us to come in and invest a couple $1 million versus it's harder to raise that money and show that proof when it's like a team and a dream where they have a concept, they have a pitch deck, but they haven't actually executed on anything yet. And it's no fault of their own. People have to pay their own salaries. They have lives to live, but angel investors can help bridge the gap to get you to a point where it makes sense to go and raise a larger financing round.
I wouldn't specifically comment on angel investors on this case, but in my experience, when I met a lot of good talented studios, I do seem to see there a lot of them who has less experience in establishing a company, growing a company, having knowledge in financials or the experience of negotiating. So it would obviously help to have either an angel investor or advisor, or maybe someone in the co-founding member who can actually really help in this regard.
Misha, from your experience in working on the with the Polish entrepreneurs, Is it any distinctive characteristic that you can see, or any particular advice that you would give to Polish teams to ensure their ventures stand out, or get particular attention in the in the processes and their transactions?
Sure. So we were fortunate to advise the Flying Wild Hog team on the sale to Embracer, and then we also sold the business to 10 Square Games a few years ago on simulation company on the mobile side. I don't think there is like a specific kind of Polish theme here, but the great things about the ecosystem, and Curtis, you mentioned that, like, well, it is a big community that has been, so the talent pool is broad, and there's also experience that sort of compounds, like that, even today I've been meeting teams that have been together as like founders of one company for like 20-25 years sometimes, and that experience is what like opens up, gives opportunities down the road. Like, you wouldn't be a Larian or a Baldur's Gate 3 without like all the accumulated experience from doing turn-based RPGs for like years and years. So I think there are elements of that in the local ecosystem. Obviously, I guess the fact that I think at some point during COVID, CDPR was the biggest publicly listed company in Poland, and is still probably a top 10 or top 5, right, by market cap. And it's obviously not the whatever pre-cyberpunk market cap, but it's still a massive business. And the fact that in this country you have a gaming stock that has been like the largest business, I think is something, the ecosystem should be very proud of. Like, I'm French, and they're the biggest French companies are either luxury goods, have been around for hundreds of years, or are utilities or oil and gas, etc. Here you have basically a tech business that is a massive and big employer, and also makes like the country shine throughout the world. So you have experience, you have that accumulated knowledge, and you have people who are like passionate about their craft. I think there's so nothing that would be like specific to the region in that sense, but it's definitely like ticks a lot of the boxes for acquirers today, and we've seen that both on like the buy side and sell side.
So I understand that you show us that CD Projekt is a success that was created shorter in one lifetime, so it could be an inspiration for the new aspiring teams to start their own projects.
Because a good way to say it.
Yeah. Okay. So now I would like to discuss briefly about the current trends, and maybe starting with the biggest of them all now, meaning artificial intelligence, and especially generative AI. So do you see these trends in your transaction? Does it have any impact on the transaction that you work in?
I think on the so where we do see this is around the legal, sort of terms on, when in the details of a contract and the reps and warranties that the company that is selling itself should give about. This is like really your universe, Radzym, around property of the IP, or if it's training some models, are they allowed to do that? I think obviously it's fascinating, and it's so early in that adoption cycle, and I think at some point it's just leveling the playing field for everyone. But there's probably that kind of period where there are a cohort of early adopters of those tools who will get there faster than the kind of AAA massive teams that are fully staffed, fully kind of budgeted for a more like kind of traditional development cycle. So I think we will see a few billion-dollar companies run by like one person, like a handful of people, created with AI, but it still feels like a little bit in the making, and we haven't had like an M&A deal where content or production as such felt like AI driven. Well, that was a USP. But obviously, in so many companies, development now is done like with Copilot and as on the side, or you can generate some art, etc. But there is right now still more, I think, not risk, but some level of extra diligence into those topics. But the next wave will be fascinating to see.
Okay, because now we are early and all those legal stuff is not certain, but
exactly, very unclear. Like, in the end, I think AAA teams will have a bit of an edge in terms of the data they own and can use more freely. But they might take a little bit longer to adopt that. So there is probably a window there to accelerate, or maybe I guess lower budgets as well to some extent.
So Curtis, do you think that it opens some window of opportunity for the studios?
Yeah, I would totally agree that I think there's a window right now where studios with a greater risk appetite can kind of punch above their weight in terms of production quality, speed of delivery, while the AAAs take their time to deal with some of the legal headache, deal with changing processes, or like it's a 3-year production timeline and they're not going to implement it until the next game. So there's definitely a window right now where studios can use it, but I don't think it's a persistent advantage. The other interesting thing in AI is net new content enabled by AI. And you see early versions of this in narrative-driven games because the language model is such a natural fit for it, but there's obviously a lot more headroom to explore there. Even the idea of dynamic difficulty, like the idea that if I play a campaign, I choose from 4 difficulty levels is going to, I think, be a thing of the past. And it will be dynamic and similar to what you see in the largest mobile games today. So there's 3 things here. There's smaller developers being able to punch up in terms of what they can deliver. There's, I'd say, increments on existing products, dynamic difficulty, more reactive, adaptive content. And then there's entirely net new genres of gameplay that will emerge from the amount of control that players can exert with AI. But all quite early right now, I would say. But the teams that are willing to experiment, take that risk, and think about the experience they can deliver with the tech today, there's definitely a window for them.
Do you agree that AI is a factor of the decision, like the project one? So would you rather invest in the company that has AI as the path to deliver, but project will rather go with conservative approach?
So VCs, like, we love risk. We love risk, and I mean, if there's the same outcome potential with lower risk, of course we'll take it, but that's not how the world works. I wouldn't say that if I see AI, I'm like, oh my God, invest, which I think some founders think that's it because the amount of pitch decks I see that are like, by the way, we use AI. It's like 2 years ago when every game had an NFT. It made no sense, right? But what does get us interested is when people think first principles about here's the experience I'm delivering and why this is something new or better than what I could do before without this technology.
And Cain, is your perspective from Asia, from the US, because you're closely working with all those markets?
I think I definitely agree that in whichever situation the studio can take advantage of technology, they should definitely do that. But it's also going to be naive to think that bigger companies would be slow on this. It's probably not just going to be a legal issue. It's not going to be just because they cannot fire all the art people and replace it to AI. They don't do it because it's not effective enough in their size. And whenever they get ready, they will do it much better than smaller companies in certain areas. So it, of course, like we should still, I mean, smaller companies, they should still take advantage, but still need to be prepared of what the other big guys can do in the future.
So I understand the question here is whether those big companies like risk as much as the typical portfolio companies of venture capital firms, because that was what I understood, that some of the younger teams may be willing to risk or to test different approaches, different capabilities that can AI offer, and it may be connected with the risk. The bigger players may not be interested in taking the risk, while venture capital funds may be willing to back those risk takers, those young entrepreneurs or young companies that are taking the risk, and then cross the open window of opportunity.
Yes, for sure, for sure. I think it was also already mentioned that different platform, different gameplay using AI are probably bigger companies. They cannot risk to have building a new game costing hundreds of millions of dollars and try to benefit from having all AI characters that would do real-time communication with the users or with different users, and using not just mobile or PC, but other functions that you have on your mobile phone, which would actually you have to cooperate with other platform holders, with other OTTs, with other service companies, and probably that's easier. Although if bigger companies would want to do, they'll probably be able to do it, but it's probably going to be easier for smaller companies to try out, build a product, and then test it out as an R&D product with other potential partners, and try to build a certain position with it. So yes, definitely true.
And the other thing that I'm taking for myself from what you said is that, as I understand, probably getting the materials that are required to present a team to the potential investors could be cheaper or could be easier, because the young studio can just use generative AI to produce some products showing what they want to achieve, like what game they want to build, and with this they can try to market their team and their idea to the investors. And then, on this AI, some teasers or some, some playable materials, they can build up with more traditional tools. No?
I'll say yes, but not yet.
Okay.
The generative tooling that feeds into gameplay, like a lot of it is just not there quite yet. I'd say it suffers from like the last mile problem where it gets to 60-80% of what you would actually need, and then when you pull back the layers, it's like, okay, this 3D asset looks reasonable, but suffers from being generated from one viewpoint, has no underlying geometry, I can't rig it, it's completely merged, and then you're in a situation that's harder to prototype with. But I do think in the near future, you're right that it will enable more rapid prototyping and teams to test concepts and find the fun in something novel a lot faster than they could in the past.
And that's a good point. I think to your question, Radzym, about like can those tools help studios generate market pitch materials faster? Was there, I don't know if you saw, there was this thing about like AI generated startup ideas that would get anonymously rated by VCs, and they would rate higher than the real pitches. So maybe there's maybe there's something, because they're based on so many previous good examples. But I think reality is there's so many low hanging fruits that teams can use in production rather than in that sort of fundraising exercise, which is a little bit commoditized now. Everybody has seen how the decent pitch decks look like, what sort of and there's almost an opposite effect of when it's too polished, it's actually been tested with too many people before, so there's something wrong there. Sometimes it's more just more genuine, etc. So I think it's obvious to say, but encourage spending more on building the product and probably less on trying to fine tune the details of that pitch materials. But just an example on those low hanging fruits, we had a client on the M&A side already more than a year ago. So that's more to say about AI or great tech tools in general. That is a team in Sweden that was able to basically automate entire voiceover of the game. So a team of 15 people, right? That with a kind of AI tool and being an early adopter of something that it wasn't even commercially available to the broader market, was able to have a fully voiced over game, but made obviously kind of with AI. And that's just time to market, cost saving, and less risk eventually for, you know, the team and the investors. So you can afford a bit more runway, a bit more, maybe an extra shot at the goal with being an early adopter of those tools. So we see it's not necessarily like the Gen AI, etc., because that's also changing so quickly. But we see teams that are like very deep into being the biggest like Houdini users and being like the new testers of whatever the new version. And that's a bit of an edge sometimes versus the biggest studios that have to kind of if I may, like idiot proof like every process to be able to scale to, you know, 300 people production. But sometimes those smaller teams are just naturally more agile, and I think we see a lot of that here as well, where experienced senior teams are still building things, right, and not like managing people.
And are there any other important like investment or business trends that the people should be aware of or wary of that you can see?
I would say like just don't follow a trend for the sake of following a trend, and always think about what is the product and the experience that you're delivering. And I think any smart investor, publisher, whoever will react to, okay, the community is using this and enjoying it, as opposed to like, this is doing something cool with a cool new thing, because the novelty wears off.
Kain, do you want to add something?
I think when we are trying to impress like potential partners, potential investors, potential publishers, we try to put something fancy there, and in a lot of cases, that's something that's already fancy in the market, which is probably the trend. And it's nice to have, but in the end, you will face tough challenges. You will face the tough question: why are you building this? Why would this be better than what's already trending? Like, what's the solution from your opinion? So unless you are prepared for that answer, and I think it makes sense to know and maybe not follow, but study the trend, because I think you can expect some type of question from your potential partners that wants to pick your ideas, and because similar things will happen in the future again. You will sometimes have trend on your direction that you will feel more comfortable, but sometimes it will be the opposite direction. And how prepared can you be? Probably not every time. And I guess that's why it's always beneficial to prepare on those questions, that if you're already expecting a meeting with them.
Misha, and how do you think which companies will emerge stronger from the current industry turmoil that we have?
Yeah, I think there's always been, you know, buzzwords around, like Gersi, you mentioned, like every pitch deck had NFTs, and then, or game as a service has been like the buzzword for a lot of that, you know, COVID and even post-COVID hype. And then like people realize, oh wait, like the game is the free-to-play live ops games, like they cost a fortune to build, and you have like 70% of the engagement is in the same, you know, games that have been around for 10 years. So people have like pivoted from that. I think there's a general, stating the obvious, like trend for more from, I guess, what we see on the M&A landscape in those more conservative times of people who, the buyers who look for predictability in a franchise. Okay, maybe you have an indie IP, but it has even a niche fan base, but have players who have come back, who have bought DLCs at like very healthy take rates, who are engaged on your Discord channel, who are really waiting for the sequel. You have like good Metacritic scores. You sell for, yeah, that long tail is kind of healthy. And while some would call that like a back catalog, and actually you see today like a lot of the mid-market publishers are relying on those back catalog sales a lot. So, but then this IP franchise, it gives a lot of opportunities down the road, right? Even to get it to someone else to develop, or just kind of royalty, or sometimes it's cross media in the days of everyone kind of looking at that. So sometimes it's less kind of shooting for, you know, the okay, let's try to do double-digit million units, like that's very few, or even millions of units, it is so rare. But uh, building for a niche that you understand really well, I think that resonates a lot with the kind of investment landscape.
Thank you. We've got in our panel years of unique experience. So if you want to learn from this experience, even if you have any questions, okay, can you go to the microphone, please, Piotr? And then we have also the question. Yeah.
So recently on Reboot Develop, John Graham from Humble announced egg funding. Do you think we'll see more and more early stage prototype funding? Because right now, to get the funding, you need an angel investor or the team of a portfolio. There are many talented people in here who just need to go to this first stage when they build a vertical SaaS prototype. So do you think this might be a trend, a new one?
I hope so. As someone that comes from a fund that will typically be the second investor and not the first, I would hope to see it. And from conversations with people in the industry, it seems like everyone is waking up to the amount of talent here and the fact that that's like a huge opportunity area to invest at good valuations in really high quality teams. If you put like $500,000 into a studio in Poland, you get like 5 to 10x what you get in California. And people are wising up to it, but it will take some time.
Yeah, I would definitely agree that. Sorry, I would definitely agree that I would love to see it happen more often than not, and especially more so if the company can find a very early investor who can help them in a different aspect. They might have a very good network. They might have different experiences in different markets, different region, and with communicating with different type of companies. So that kind of relationship you actually want to take advantage of it as an investee as well.
I would just add, I think comparing games financing to like other technology sectors is still very early in terms of like financial engineering and sophistication for some of the models around, like for example in mobile games. I know it's probably a smaller community here in this room, but we've seen the rise of like debt financing enabling growth. Like you can finance your user acquisition with your marketing with debt, showing your KPIs, etc. And that's been a non-dilutive way for a lot of studios to grow, and you create like equity value this way. I think similarly we'll see new models around more kind of sophisticated financing, like maybe we've been hearing people talking about like slate funds of, hey, let's invest in 5 projects and raise capital on the back of you doing what, 5 or 10 AA, AAA companies, and you can sort of cross collateralize it. So if you one fails, you have another 9 to kind of get your money back. So those things it will take time to really kind of pan out. But even on the earlier stage, there is certainly a market for a kind of mix of, let's say, some equity and some kind of project like revenue based financing, kind of aligning interest in a way where you can still go for publisher deal, etc. down the road, but would be giving an investor some first like a little recoup capped and then still equity on the back. So I think those models like are going to be more mixed between project finance, equity, other forms of capital. So hopefully the options are going to be also wider for and then obviously there are games that can be financed by sales, future sales, like pre-sales, some also kind of early access sales. We've seen like even free-to-play studios be able to like support it by communities of fans, and that's, I guess, a perfect scenario, not for everyone, but that's I think the number of successful bootstrapped studios who have just relied on like friends and family kind of capital is astonishing. It's actually like we, as an advisor in the space, have to realize like there is an entire universe of companies that have never really raised capital and even need any form of transaction. That's sort of the real iceberg in the industry, which is something amazing and only possible in games, where if you get to like positive returns, you're usually outsized returns. You can't really build a SaaS product without diluting it massively. So that's, I think, the beauty and so in the unpredictability of the sector.
Thank you. I'm Albert from Marshall Media. I think Areem they've anticipated what I was going to ask, but I'm going to ask it anyway. What areas, if any, do you see opportunities, investment opportunities in early stage mobile games? What are the opportunities or challenges, and what would an early stage mobile game company have to show to an investor with your profile?
Define early stage. Like, are we
not someone who's invested 500 million and generated 1.3 billion?
There's a huge
they've got
stretch from 0 to 500. Like, is it early metrics? Is it no metrics?
They've got a prototype. They've maybe done a soft launch.
Yeah. So, I mean, the big IDFA changed the entire early stage mobile landscape. Everyone knows this. Teams that think about, if you have metrics, you show you can acquire users profitably, it's very easy. Not very easy, but it's much easier to raise money. But there's a huge time lapse in between soft launching a game, and I work with a bunch of our portfolio companies that are in this stage, and getting to ROAS positive at any reasonable scale. The advice I would give is, one, like focusing on distribution and thinking about that. Like, the conventional playbook doesn't work anymore. You need to do something novel, and you need to think about embedding distribution into your product, because otherwise you're going up against the likes of Dream and King and all of the people that are sponsoring this conference that can just spend way more on a user than you can, because they've honed the monetization machine, the user segmentation. You need a way to either access users that aren't being targeted by your competitors, or to acquire them much more cheaply, whether that's social features, K-factor, things like that. The other thing I would focus on is, if you can't get monetization to that point in time, you can still think about, one, like the engagement and the retention profile of those users and really optimizing for that. And then the second is building a compelling plan for how monetization is going to be built in the future. So, example, have a studio I work with that just raised a bunch of money with almost no ROAS, because they were able to build a really compelling monetization plan and show that, hey, compared to our peers, we're much more retentive, we're much more engaging. And so there's no silver bullet answer here, but I think it's about understanding the things that investors will evaluate. And if you can't show metrics or proof, you need to show a pretty good plan. Does that answer your question?
Yeah, I think it's a really long plan, because I've raised money as a founder for a games company nearly 10 years ago, and we had a strategy with brands, and it kind of worked. But there's just such a distance between something which is even profitable and then competing and going there. It just seems like the market's kind of winner take all, like quite violently so.
It does seem that way right now. I'm hopeful. I'm bullish mobile, but I think I'm in the minority of early stage investors.
Thanks.
I think we can accept one last question.
A short one.
Yeah.
Radzym, thanks for bringing interesting voices. And as you said in the title, global investors. So my question is, from a global perspective, when you invest in Polish companies, how big issue for you is that the company is registered in Poland, an LCC in Poland? Quite often I discuss, especially US ventures, they say it must be Delaware or whatever structure, but not Poland. From your point of view, where is Poland and investing in Polish legal system now? How do you feel about it?
I'll say it doesn't really matter to us. As a company gets more mature, we would encourage to set up a top company in the UK or in Delaware. But that's mostly because I think other investors care more about it than we do. But if you're like a small studio, I wouldn't advise spending time and money on that. But that's just our point of view.
I think it really doesn't matter so much for, I would say, more on the M&A side of things. You have a like robust like legal system, IP laws, etc. Employment is fine. The main caveat here would be if you're there's a massive cohort of publicly listed companies here that are kind of a little bit subscale for by like international standards, what public markets, right? And those I think are complicated to, you know, invest in, buy out, like you almost don't really know what to do because it's complicated, right? You need to delist, it takes several months, you don't know if investors will, so that's where we almost see as like a financial advisor, like a bit of an anomaly of that, the size or the outsize number of publicly listed businesses here that took that, you know, opportunity to get some, you know, retail money, and that was, I think, maybe better than not raising capital. But this is a difficult kind of spot to be in, and there's no real comparisons anywhere in Europe or beyond of being a, you know, a 5 to 10 million market cap business with no liquidity but still regular reportings, etc. So that's I think a problem for, you know, going as to your point, like international capital.
I think we are one of the proof that region wouldn't really matter. But at the same time, I think you would also want to be prepared that for as an international company or a Korean company more specifically, we don't understand how things work here. So the communication cost for our offices, for our accounting, financial offices to understand what's going on in the Polish financial statement, that it takes some time to increase that understanding.
But I think that the message is positive. That's like, you know, being invested as a Polish company established here is not a deal breaker or anything very difficult for the at least GameDev investors. And with this positive message, thank you all. And like we have our panelists still together with us, so we encourage you to start more informal discussions after the panel. Thank you.